What's up guys, Moyad here. Welcome back to another lesson of the order flow course. So in today's lesson, now it's going to be a short lesson, but in today's lesson what we're going to be going over is how to identify short-term reversals in the market. Okay, so right here guys, you can see that I have 6B open. Okay, so this is the GBP future and I'm going to pull up my GBP USD chart. Now, taking a look at obviously this chart, so far we were in a distribution, of course. We broke down to the downside and we had a lot of liquidity. Now remember guys, if we take a look at, for example, the 2 hour, this might be a bit clearer. Remember, when we are in a consolidation, okay, we have liquidity being built up on both sides, on the upside of the market, okay, and on the bottom. So right here we had the liquidity up here, and what happened, we had our manipulation, so our UTAD after so basically our uptrust after distribution, liquidity got cleared above these highs. What happens, we break down, we break this low, and we're waiting for this liquidity to eventually clear. Now remember what we said guys, every time, okay, especially if you've taken our smart money course, you should pretty much know everything that I'm saying right here. Okay, this is basic institutional trading in general. Okay, so every time liquidity gets cleared, usually we'll get some sort of retracement. Even if it's a very small retracement, usually we'll get some sort of reversal. Okay, this usually will happen. Okay, actually show you down on the 1 hour time frame. Okay, so what we have right here is our low right here. Okay, so we have our double bottom right here, and we also have this low right here got cleared. So all the liquidity on the downside got cleared. This low got cleared, this low got cleared, this low got cleared. Okay, right here got cleared, so this double bottom. So what do we have right here? Minute price comes down to here. This is, remember, this is the smarter trader manipulation. What do I mean by smarter trader manipulation? So usually with smart traders, okay, most of the time they'll be able to anticipate the market. They know where the market could potentially be going, they analyze the market correctly, but usually they will get in at the wrong time. So right here they try and get in, they'll get in from this support, whatever it is. They find a lot of price action right here, so okay, they consider this as support. They get into the market, it pushes up a bit, they have their confirmations that there's engulfing candles on the 2 hour time frame, whatever it is, and now they're starting to enter the market. But no, what does the market do? Here's where the institutions come in. They come in and they literally just go one big candle, and then they reverse the price action right up here. Now this is a rejection candle right here, so you can see usually this is the reversal candle, and you can see this is called the FU candle. Okay, so with this type of candle you can see price action clear liquidity, okay, and usually reject and close bullish engulfing. Same vice versa, if you're looking from a sell position, okay, what happens is you usually find a candle that will clear liquidity, such as this one right here. Okay, clear liquidity, these double highs, and then reverse, and then the second one will become a bearish engulfing. Okay, so when we look at it from an order flow perspective, now just looking at it from a price action perspective, yes, we can understand that we could potentially get a reversal right here, but sometimes price could just continue downwards. So with order flow, this is our confirmation now to see if, okay, are the buyers now coming in, is the manipulation actually occurring from smart money or not. So we pull up our order flow chart right here, and I'm on the 5 minute time frame. So I'm gonna drop down on the 5 minute time frame right here. Okay, so once again, what do we have right here? Not only did we have the liquidity back here, we also had the liquidity right here. So once again, what do we have? We have the support being created on the lower time frame. So remember, the market is fractal, so manipulation is not only being it's not only occurring on these higher time frames, it's occurring on these smaller time frames as well. Okay, remember, in this manipulation, okay, or if it's a spring, whatever it is, usually this will be the last manipulation up before the up move, and this is where we're looking to enter. We're looking to let that manipulation occur, and then we're looking to get in on that mitigation or retest of that candle that has created that manipulation. Okay, so when we look at here, once again we get smart trader manipulation. Okay, so the market will come down here, react off here, tricking people that, oh okay, this is a support, let's start buying. So they anticipate the market correctly right here. They start buying, anticipate the market, boom, nicely. Or some of them might not just get straight away, they'll wait for the confirmation. This is a very clear confirmation, because you can see it's a very strong big buy candle. Oh, the buyers are appearing from this point of interest right here. This is their top process. So they start buying up here, and then what happens? The market will reverse on them, boom, create these 3 consecutive candles, smack their lows, okay, smack all their liquidity. Their stop loss will be placed under here, or their stop loss will be priced below this previous low, or at break even. Once that market pushes up, they will get cleared, and then price will push all the way up. Okay, now on the other side as well, you'll also have breakout traders. Okay, so they'll see this right here. They're not trading the buy, they're waiting for price to break out below this. So what they'll see is once they see that breakout, what they're doing is they're aggressive selling. They're starting to get into the market. Boom, 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 boom. So you can see it on the 1 hour right here. Or sorry, in the 1 minute. Once we get that breakout below this low, we start seeing aggressive 1 minute candles. Instantly what happens though, we get that reversal. Now, once we look at it from an order flow perspective, what we can see here on the 5 minute time frame is this is the 5 minute low that we were looking at. This is the liquidity that got cleared. This liquidity coupled up with the liquidity on the left. And what we can see right here is this is the last, this is basically our low right here. Okay, this is our major low right here in this trend. And what you can see is selling pressure starting to occur. Okay, the minute we break below this low, we start getting selling pressure. So we can see selling imbalance. The commitment of traders right here is very, very low in the candle, showing us that there is a lot of buying and selling happen. Most of the buying and selling volume is occurring right here. Notice once again, once we break below that low, look at the contracts. Barely any contracts traded on the left and right here. Okay, on the bid and ask 4, 9, 5, 6, 1, 3. But then when we break below this low, 1746. So you can see sellers are aggressively selling the minute we broke below this low. Next candle after that again, what do we see? We see 79, 36, 27, and the other contracts are very, very small, 11, 16, 18. So what do we have right here? We have a seller's trap. Okay, why do we have a seller's trap? Whenever, now this has already been covered already in the seller's trap, buyer's trap lesson, but once again, as revision, whenever a seller trap occurs, usually what you want to see is selling imbalances below on the wick, okay, the last numbers on the wick, and you want to see the candle closing bullish. Okay, so showing us our reversal. To look at that here once again, this is the candle that we have right here. Okay, this is the candle. So it breaks down, clears that liquidity. Okay, selling imbalances down below this level, and then we close bullish. Okay, so the moment we close bullish right here, you can start seeing that we have our single print right here. Okay, so we have a single print occur, and remember our commitment of traders right here. See, this is how you know the manipulation, the seller trap and buyer's trap is actually not fake. Okay, so you can see what we have right here is the commitment of traders is right on the wick. So at one point, okay, there was so much selling going on here. At one point, this candle was a bearish candle. Okay, and just selling occurring, but out of nowhere, what do we have? Boom, buyers are starting to come in. Okay, the market is now switched. All the liquidity got cleared. Okay, everyone's stop losses got taken out, and now what are smart money doing? Smart money are pushing price higher in the intended direction. Now what do smart money do? They come back down, they retest this level to take their position out at break even, and they push price higher. So you can see price literally came back down to this level, touched the commitment of traders exactly on the dot right here. Boom. So found this area as support. Why is area support? Because this most volume occurred right here. Once again, you can see 46, 111. These numbers are the largest in this whole candle, okay? So this acts as support for us because the most price action, basically the most buying and selling was occurring right here. So this will act as support for us right here, act as support, and away it goes. Okay, so once again, we would have a seller trap right before we push up again, and then boom, we have a massive big candle to break our structure up, and this then confirms our uptrend right here on the 5 minute time frame. So you can see then we have our buying imbalance just starting to come in. Our coming trading is actually closing at the top of the candle. Whenever it closes at the top of the candle in a bullish candle, it's showing us a sign of strength, okay, and whenever it's closing at the bottom, okay, it's showing us a sign of weakness. Okay, so dude, that was a successful trade right here. And now to look at that from a smart money perspective, there's a couple of ways you could have gone into this trade. So first of all, you could have looked to get in on this 15 minute time frame. Now, the thing with this 15 minute time frame is, see, once we got that bullish engulfing candle right here, and we had our seller's trap, what you want to do is you want to get back in the retracement on the open or the 50%. Now, if you usually have your stop losses tight like this, you would have gotten stopped out. That was unfortunate. It happens sometimes. If you took the wick, okay, usually, which is something that you might want to consider with these smaller time frames, especially with USD pairs, because these are very, very volatile pairs, then you would want to do something like this. Okay, place it below the wick. Or you could have gotten in from the 2 hour time frame. So we had our scenario number 1 set up. So once we got that bullish engulfing candle, we wait for the second price action candle to come into the 50% of the open of the previous candle to it, and then we look to buy. So this was a beautiful trade right here. See, comes right into the 50% of the previous candle. Okay, so our institutional candle, and then price pushes up. So this is a very, very nice trade that you're able to capitalize on. So basically, to revise everything that we just talked about right here, the confirmation right here that order flow allows you to take or to see is we can see our reversal, okay, based off our buyer and seller traps from a short-term perspective whenever liquidity gets cleared. So we can see our short-term reversal right here. Now, that doesn't mean that this whole move is just going to be a bullish move, okay? This potentially could just go up, fill in 50% of this, and start going down. But this allows us to catch very, very nice short-term trades, okay? Day trades or scalps, whatever it is. This allows us to catch these small moves, and this move is to be reckoned with because it was nearly a 30-pip move, okay? With a nice RR and a small stop loss, this is a perfect trade that you were able to capitalize on. Okay, so this is pretty much it for this lesson. Thank you guys for tuning in, and I'll see you in the next one.